Hey everybody, Marty Mazur. Good afternoon, May 2016. Wasn't going to bug you today, but I promised I would yesterday if it got noisy today, and it did. Dow pretty much went back to where it started the day yesterday. We gave back just about all of that 220-point rally. Thing for the S&P, as you can see here. Here was that line we talked about yesterday, closed above the technical important line of 2080. At least that's what I'm hearing. And but it couldn't hold it, not even for a day, and it closed at the low today. The S&P was down about 20 points. Yesterday I said it really needs to show some momentum to make it through these resistance lines, and I sounded a little skeptical at the end, although I liked the rally yesterday. It had very good breadth. Every sector participated. I was a little. I thought the volume was a little suspect. That's these bars down here. I'll talk about that in a second. But folks, the technicals, and I won't show you the two indicators I always show you. They're not. Nothing's changed. They're still suggesting to me that at least in the near term, the risk would be to the downside. Absolutely doesn't have to happen that way. But right now, that would be my best guess. We're not going to try to time it. Good buying opportunity. If we're sitting on a little extra cash or we're waiting to put some money to work, then I think we'll have some opportunities. At least that's what the data would suggest to me at the moment. Now, not everyone is interpreting the data that way. There are a lot of people out there who are bullish even over the next couple of months, so maybe they're right, but we'll wait and see. To our long-term, or as it relates to our long-term goals, I don't think the next few weeks means anything whatsoever. But I do want to set your expectations accordingly. So again, back here to the volume. Notice that as the market began to trend a little higher, volume didn't. Volume wasn't supportive of that. As I've said many times of late, it's always best to see volume move up as we get a decided a strong move in either direction. So if you're bullish and you want the market to move higher, you're going to want to see confirmation in the volume. So we haven't been seeing that. We really didn't see it for most of this rally. Notice here as the S&P trended higher, the volume trend actually was lower, whereas when the market was selling off, the volume trend was higher, although it petered out as well as the correction lost steam, and then we made our way up in here, and I started talking about volume somewhere in here. Doesn't mean we can't have a sustained rally on low volume. It's just the volume is something that gives you a little more confidence. As you can see, again, as the market spiked lower today, volume was higher versus the day when the market was higher by even a little more than it was lower today. You didn't get that confirmation in the volume. Just another indicator that tells me the near-term risk is probably to the downside. Now, let me sound more optimistic and combat what a lot of the headlines talked about today. We had weakness in the retail space, big time. Weakness pretty much across most, if not all, consumer discretionary stocks, although Amazon, I believe, was up on the day. Disney last night reported earnings and revenue that missed expectations, and it just got walloped. Same thing for Macy's today. So I heard a lot of the pundits come out and say, you see, the consumer really isn't showing up. We should not be bullish on the economy for the second half of the year and so on. Well, okay, I can understand based on today's price action why they might say that. But when I look at the world in a little deeper fashion and I look at earnings so far that have been reported for the first quarter, and we're almost done. As you can see here, 451 of the S&P 500 companies have reported. So what's it been looking like? How have companies done relative to what analysts thought they would do? And let's focus on consumer discretionary because that's what everyone's talking about today. So 60 of the 84 companies in the S&P 500 that qualify or are considered consumer discretionary, 60 have reported. And in terms of sales, 63%, two-thirds, have reported sales better than what analysts expected, and that's better than what the average has been of late. In terms of earnings beats, 85% of the 60 companies that have reported beat analysts' earnings estimates. Now, it wasn't hard to do. I'm not going to say that was any great feat because, of course, estimates were ratcheted lower. But let's look at true growth, and it's really sales growth that I think we want to look at because that one's very difficult to manipulate. And in the consumer discretionary space, we actually saw 6.75% sales growth. I'm not saying that's gangbusters. It's not as good as what we're seeing in telecom, but it certainly is better than what we've seen and better than, as you can see here, a lot of other sectors are doing. What about earnings growth? 22.65%. Very impressive. Of course, there's some manipulation, there's share buybacks, and there's accounting and that sort of thing. So I really like this, and I think we can take that one to the bank. This is very, very good. But you always got to be a little skeptical with earnings. So revenue, sales growth, I'll say it one more time. That's a good sign, and it's contrary to what a lot of the quote experts are screaming about today, and that is weakness in the consumer discretionary space. Plus, when you get to retail, folks, we really can't have that conversation or buy into the notion that retail is dead if we don't take into account the impact of Amazon. And Amazon, of course, is a monster retailer. And it, of course, is doing real damage. And you see it, I'm sure, in a lot of your households. We're certainly seeing it in ours. We're not buying as much from the brick and mortar retailers because we have Amazon at our disposal. And as you may know, Amazon has done very well of late and reported good results for the first quarter, and their stock's been rewarded as a result as well. So no, you can't really, or I don't think we can legitimately buy this narrative that the economy is about ready to spiral into the next recession because the consumer isn't showing up when you consider the numbers that I just showed you. So folks, there is so much more I can talk about, but I don't want to keep you more than the 6 minutes and 20 seconds that I have already. So I'm going to leave it right there. And as you know, I'll be back very soon with more, and hope you have a good rest of the day. Talk to you soon. Bye.